Hey guys, today we are going to talk about Warren Buffett in 2022, what you can learn from one of the world's best investors. So, we're going to talk about Warren Buffett, and um, he's one of the best investors, and what that means for us with our future investments. So Warren Buffett is arguably the greatest investor of all time and has compounded his money at such a high rate that he's now the seventh richest man in the world with a net worth of nearly $100 billion, according to Bloomberg. Buffett is unique among the world's wealthy in that he amassed his fortune um, by investing and reinvesting his capital into a number of different businesses before ultimately taking control of Berkshire Hathaway, which serves as his primary investment vehicle today. Thanks to his enormous success, integrity, and willingness to speak publicly about his investment and philosophy and other matters, Buffett's fame has grown significantly over the years. Um, Berkshire's annual shareholder meeting was once held in a small cafeteria with just a dozen or so people in attendance. But today it attracts tens of thousands and is broadcast online. Here's what else you should know about Warren Buffett, his investment approach, and a breakdown of his largest holdings right now. Key facts about Warren Buffett. Uh, Buffett bought his first stock at age 11 after he said he'd read every book on investing in the Omaha Library, some of them twice. Buffett studied at the University of Pennsylvania, University of Nebraska, and Columbia Business School. It was at Columbia where he met his mentor Benjamin Graham, who many consider the father of value investing. Buffett ran an investment partnership from 1957 to 1969, generating annual returns of 23.8% after fees. So Warren Buffett's and Berkshire Hathaway's top investments. So he's got stock in Apple. Um, they have um, about 894 million shares that they own, which is valued at about $122 billion. They also have stock in Bank of America. They have about 1 billion shares, worth about 31 billion. Coca-Cola, they have about 400 million shares, worth about 25 billion. They have stock in Chevron, CVX. They own about 161 million shares, worth about 23.4 billion. They have stock in American Express, Kraft Heinz, Occidental Petroleum, Moody's, BYD, and U.S. Bancorp. So Berkshire Hathaway, when Buffett took control of Berkshire Hathaway, let's see, other notable Berkshire investments include American Express purchased a stake for about 1.3 billion. That was worth nearly 25 billion at the end of 2021. So his investment strategy, and a good investment strategy for people, is In his 2019 letter to shareholders, Buffett laid out in simple terms the criteria he looks for when purchasing an entire business or a non-controlling stake via the stock market. He says, quote, "We constantly seek to buy new businesses that meet three criteria. First, they must earn good returns on the net tangible capital required in their operation. Second, they must be run by able and honest managers. Finally, they must be available at a sensible price." So business, Buffett's first criteria involves the quality of underlying business he looks to purchase or invest in. He wants businesses with strong economics, which means they earn good returns on capital and generate cash flow for their owners. He also wants to find businesses that he understands. Management, evaluating who is running a business is another key part of Buffett's investment strategy. He's often said that he can't provide managerial expertise if it isn't already in place, and he knows that a CEO has a major impact on how an organization is managed. And then price. The final criteria Buffett uses in evaluating a potential investment may be the most important: price. No business or manager is so good that they can provide a great investment no matter the price it was purchased at. Buffett has long subscribed to the theory of value investing, though he and his partner Charlie Munger would say the term is redundant because all intelligent investing is value investing, getting more than you're paying for. Initially, Buffett purchased investments that had many issues, but their prices were so low that they made up for the challenges the businesses faced. This method was known as the cigar butt approach, because it resembled finding an old cigar butt on the ground that had one or two puffs left in it for free. So, top investment advice from Warren Buffett. He says, don't lose money. Buffett has often used this simple and rather obvious piece of advice to highlight the importance of risk in investing. By avoiding situations where you can lose, you're naturally left with investments that are likely to generate gains. Thinking about what can go wrong before you think about possible gains can help you avoid major setbacks in investing. Be fearful when others are greedy, and greedy when others are fearful. This advice speaks to the importance of understanding investor behavior. And then he says, wait for the right pitch. The ability to wait is one of your biggest advantages as an investor. If your broker or friends are urging you to invest in something you don't understand or think is priced too high, you can always wait for something else. The next one is index funds are best for most people. Despite making his fortune as an active investor, Buffett acknowledges that most people will get better results by investing in a broadly diversified, low-cost index fund. And last but not least, productive assets are the only investment to make. Buffett has spoken out against speculative assets in recent years, instead preferring to highlight the value of productive assets such as stocks, real estate, bonds, or farmland. Speculative assets such as gold or cryptocurrencies don't produce anything for their owners. So their price is entirely dependent upon what someone else is willing to pay. If you buy 100 ounces of gold today, you still have 100 ounces 20 years from now, whereas productive assets can produce more over time. Anyways, hope that helped. Hope you have a great day. Thanks.